Hi there, welcome to Kneppy Invest and welcome to November 13, 2024. We have about 1 hour and 35 minutes left of trading today. And not surprising that we've seen a fairly negative day, but I will say this, I didn't expect this negative. I did expect a red day, but XGO down 0.9%, small caps down 1.17%. Tech down 0.79 and resources 1.11%. So it's been a bit of a broad sell-off today. Now, the reason I say it's not surprising on the one hand, but a little bit surprising on the other hand is because the Dow Jones was down 0.86%. Now, NASDAQ was only down 0.17%. So I thought maybe, just maybe, we'll see some positive action in maybe some of the tech companies, but that's not so, it seems like. And also, I should not forget to mention, the Russell 2000 was down 1.77%. So a fair bit more weakness in small caps than the tech companies or the larger companies in the United States. So not surprising in that regard. But I thought maybe tech would be up a little bit more. Maybe we wouldn't be down so as much as what we have seen so far today. Okay, so the agenda for today's video. Same as all other videos, we'll go through the ASX today, look at the best and worst performing sectors, indices, and also companies. I do have a top 5 stocks of the day, and instead of being hard to find a top 5, I found it hard to leave out some companies because we saw quite a few interesting announcements released today, and I might just briefly touch upon some of those companies that did not make it in the top 5, and maybe I'll have a look at the charts of these companies just to see if I have missed out on a breakout. And then we'll have a look after the top 5 stocks today, have a look at those charts and a few other charts as well. And then maybe I'll touch upon a few of your comments. In fact, I can actually look at a chart to answer one of your comments. Yes, Delorean. Delorean hit 20 cents. In fact, I think it's 21 cents now. Anyway, let's go to trading economics. I do actually have to refresh this. For some reason, it doesn't refresh it from the previous day. Asian markets fall on weak Wall Street cues. Yes. Dollar holds gains ahead of key inflation data. Japan producer prices rise the most in 14 months. Oil hovers at 2-week lows. And South Korea jobless rate climbs 2.7%. Australia's third quarter annual wage growth weakest in near 2 years. That's good news for future inflation. If we're not asking for more wages, that can be beneficial. Well, yeah, beneficial and harmful to inflation. Beneficial for us? Well, unless you need a wage increase. In a way, it's sort of not beneficial because we've had significant inflation over the last few years, and I don't think wages are kept up. So we actually do need some robust wage growth, but there is that question. Robust wage growth might lead to increased inflation, but eventually wages will have to catch up and overtake the inflation we have seen. If not, then we're going backwards as a country. I'll have a look at some briefs later in the video if I need be. I'm pretty sure they'll probably have a lot of the news flow that I'll talk about in today's video. Okay, so let's go to the ASX today. And of course, we've already talked about, well, we haven't, I have talked about the weakness of today. I'm just going to refresh this just to see if we've seen a bit of a rally. No, it's actually gone the other way. And the reason I'm doing that, because sometimes if you do see the market rally late in the day, that could be a sign that the futures in America are up. So in a way, we're expecting a good or better day tomorrow, but not seeing that right now, although that's based off a very small time sample. I talked about 5 minutes ago. Anyway, let's go have a look at I'm just having a look at what's happened today on the indices, and there's been a slight little rally in the XGO and XAO from the lows, which were about 11:30 a.m. Slight rally, so they would have been down probably about 1.1% at its lows today. And on the flip side, tech has dropped off during the day. Okay, so let's have a look at the best and worst performing sectors, and there is one sector up. Luckily, I'll borrow a drink. For some reason, when I talk, I have the need to cough. Sometimes, not all the times. So utilities up 0.18%. Utilities had a good day yesterday, and that's continued on today. Discretionary down 0.31, which is interesting. Because Staples is down by significantly more than discretionary, but Staples is supposed to be defensive, but it's doing worse than discretionary. And overall, pretty bad day for sectors. All the sectors apart from utilities and discretionary down by over 0.5%. And the two worst ones here, healthcare and financials. Financials is interesting. I'm going to open up financials. I'm assuming the banks are down. CBA did release a trading update, which did not make it in my top 5 stocks of the day. And I didn't expect much movement, but maybe I'm wrong. Maybe CBA has been sold off today. Let's have a look. My market cap. Oh, not really. And I think ANZ Group has gone ex-dividend. Yeah, nothing. They're all down. It's just a bit of weakness in financials. Why is Infratrail financials? I don't know. Anything of note there? Not really. Let's have a look at the different indices. Gold is the best performing index here, but it's down 0.8%. So this does not include any sort of utilities. You can actually increase this. This is not all the indices. So if you have a look at all the indices, I'd be surprised if that is still the worst performing because of utilities, of course, and consumer discretionary both are doing much better than, what was it, gold. But gold, better today than we've seen in the past few days, but still down. And finally, just going to have a look at the ASX 20. Down 1%. I think this sell-off today has been fairly broad. I'm going to say maybe 3 companies up, 17 down. We already know QBE is up, if I remember correctly. So 3 up, 17 down. Yeah, there we go. I'm becoming a master at this. And the 3 companies up, which do include QBE, there it is, Aristocrat, which I completely forgot, did release their results today and is in my top 5 stocks of the day. And Fortescue is also up in the worst performing companies, apart from ANZ. We have Rio Tinto, which is interesting, iron ore. Fortescue is up, but that's also iron ore. Transurban, interesting, Transurban, some might consider that defensive. Macquarie Group, NAB, Woodside, BHP and Wesfarmers, and Telstra all down by more than 1%. Okay. Let's turn attention to the best and worst performing companies on the ASX today, just to see if I've missed anything. On occasion, I will miss some interesting news flow that might lead to the share price, particularly of a mining exploring company rising 200 to 300%. We haven't seen that for a while, but maybe today is the day. And straight away, I can see no. At the top of this list by percentage change is Self-Wealth. If you haven't heard, there is a takeover bid for Self-Wealth by Bell Financial Group, which I actually own Bell Financial Group, and I'm at the precipice of selling Bell Financial Group. I did show the chart of this company in a previous video not that long ago, and if you have a look, oh, it's not updating. There it is. And Bell Financial Group share prices are going to be going sideways. So I was thinking maybe now is time to take profits with Bell Financial Group. I do know Self-Wealth is up a lot. Last time I looked, Bell Financial was not trading. There it is. It's up. So the market likes this particular takeover of Self-Wealth by Bell Financial Group. And as a Bell Financial Group trader, I don't really care, apart from whether the market likes it or not. At this point in time, the market does like it slightly. They did talk about synergies, EPS accretive, that sort of thing when it comes to this acquisition. And I'm pretty sure the management, if I remember correctly, and I trust my memory in this regard, if I remember correctly, the management of Self-Wealth does recommend shareholders say yes or accept this particular takeover. Anyway, so possibly Self-Wealth would no longer be on the ASX sooner than later. When I say sooner than later, I'm talking about within the next, say, 6 months or so. And now Bell Financial Group has grown a little bit stronger. And if I was a shareholder of Bell Financial Group for the longer term, I wouldn't mind this particular acquisition. Okay, let's go back to the top gainers today. Open Learning on a low turnover. Fat Fish, okay, up 38.46% on pretty good turnover. I'm assuming this company did release something today. Now, the share price is fairly low, and they didn't. So a little bit of noise. Fair bit of volume today compared to other days. Something's happened with Fat Fish. I'm wondering if the company will get a price query from the ASX today. Actually, a volume and price query. Let's just have a look at the chart for Fat Fish. What's happening here? Share price, yeah, the last 2 days, share price has just gone a little bit bonkers. I wonder if there was a cross trade or something today, just one big trade. That could explain that maybe someone important or big took a position in this company. I'm just seeing a lot of buying and selling, and no big single trades. Okay, so something's happening with Fat Fish today. No idea. So maybe we will see some sort of announcement coming out over the next either later today or maybe tomorrow in regards to why the share price of this company has been rallying the last few days. If they do release any sort of positive financial announcement, loose lips. So keep an eye on Fat Fish. And the volume today has been extreme compared to what we've seen, well, this company's seen over the past 6 months. Okay, Fat Fish, Dubber, don't really need to talk about that. Bioxen. Oh, I am trading Bioxen, by the way. I'm not sure if I should. Vection Technologies, up another 14.82%. This might look a little bit interesting, Vection Technologies. They do virtual reality and also augmented virtual reality. So I've been thinking this company has potential in the future, but the share price had been a downtrend for a while, went all the way down to 0.8 cents. Now it's 3.2. So share price has quadrupled in the last couple of months, and we've seen that on increasing volume or higher volume. So things might be turning around for the company. I did have a look at their most recent Appendix 4C, and I didn't get anything positive or all that positive from it. So I'm not sure what exactly is happening here, but maybe Vection Technologies' name is getting out there, but I'm not quite there with trading this company at this point in time. I need a little bit more proof from the company itself. What else do we have here? Nothing. Okay, let's turn attention to the best performers by market cap. James Hardie up 8%. They did release their first quarter results. I think it's first quarter results. But James Hardie did make it in my top 5 stocks today, so I can leave that to a little bit later. Paladin, nice bounce from yesterday. Orabanda, nice bounce from yesterday. So even though gold sector is down, Orabanda maybe it was a little bit, there was a little bit of an overreaction from the market yesterday. Next Gen Energy, which is uranium, up 6.2%. I did notice, one thing I did notice was uranium was up a fair bit. So wouldn't be surprised. Yeah, uranium up 8.3%. I do have uranium watch list here. So I'm just going to have a quick look at uranium. It's way down the bottom because it's U. And, I thought I was going to see lots of green. But Boss Energy up 2%. Paladin, yeah, nice little bounce. But I expected a little bit more green in the uranium sector. So Next Gen had a good day. Pantoro, just like Orabanda, nice little rally there, or bounce after yesterday. AMA Group, that trade's going well for me. Let's have a look at AMA Group. Yeah, this chart is actually starting to look a little bit better. So I wanted to see the share price get above 6.9 cents. Now it's got to 7 cents today. So I am liking this chart more and more. There was a false break of the resistance level on, what day was that? That was the 5th of November. So one of the reasons I don't put in automatic stop losses is because of that. So my stop loss for this company is around about 5.8 cents. I don't have it here, but it's about 5.8 cents, actually 5.7 cents. And the share price on that day fell briefly to 5.4 cents and then rallied since then. And I just think on occasion this happens. You can set your stop loss at a certain price, and then one day, all it takes is one day with share price drops and then suddenly rebounds and you are stopped out of the position. That's why I like to do these manually. So I had a look that day. At the end of that day, share price had risen back up above the support level, my sell point, and the share price has continued to rise since then, up to 7 cents. So looking pretty good. AMA Group, even though I don't like the company at all, this is about the chart. And also maybe the valuation too. OFX Group had a pretty bad day a few days ago, last week or so. Nice little rally today. Biome did release something today. Okay, so this is one I did miss. I didn't miss the announcement, but Biome, I do like their marketing team. They do market their company and how they're performing, unlike some other companies that I won't mention here. Business and international market update. Wasn't that exciting, to be honest with you, but the market likes this sort of thing. Things are progressing well for Biome. talking about market launch in Canada. Terry White Chemmart retail scan sales reached 3.5 million for 12 months. This is something I think most companies should release, how the company is progressing. I think the market likes it. I like it. I know there are some experts out there who think companies should not release any sort of information for a whole year, which is ridiculous because those sort of experts want you to hold shares in the company forever, and they just don't think companies should release announcements like this. And I do actually disagree. I think you do need updates how a company is performing because you are a shareholder of a company. You own a portion of that company. And when you own a portion of a company, just imagine if you own a company itself. You want to know how it's performing, not once every year, but once every so often, and that so often is a fairly short period of time. Anyway, that's just me. So nice little announcement for Biome, and I have a feeling the share price had pulled back a little bit over the past month or so. Let's have a look if I'm right. Yeah, actually it wasn't a month. It was only like the last week or so. Had pulled back from about 80 to 84 cents down to 60 cents, and now a little rally, but not much of a rally, to be honest with you, from the lows yesterday. Share price, I think, the chart is under a little bit of pressure because the most recent high did not exceed the high previous to that. So this is sort of the first signs of maybe Biome has reached its peak. And to be honest with you, the market cap of Biome is a little bit higher than what I would like, 141 million. In fact, after today, it's about 155 million. Okay, so I think that could be it for all the top gainers today. Now let's have a look at the top losers. By market cap, and Nuix is at the top, down 21%. That's interesting. Well, it's not interesting. They did release, or they did have their AGM, and the market doesn't like something about it. This is another one I'm trading, but it is in my top 5 stocks of the day. In fact, it is my top stock of the day. Nuix, Marine & Co. Share price all up and down like a yo-yo. In fact, the share price of this company has been up and down by more than 10% each and every day, it seems like. Let's have a look at the trade history. Yes, that is absolutely true. This is and has been a day trader's dream. The share price of this company has been up or down by more than 20%. In 90% of the days, 1, 2, 3, 1, 4, 5, 6, 7. So 10 trading days, and of 8 of those days, share price has either been up or down by more than 20%, and 2 of the other days by above 10%. So let's just have a quick look at the chart. In fact, the share price now at 57 cents is sort of heading back towards where it started, which was 20 cents. It's been as high as $1.50. So if you bought near the high, you're almost down 67%. And this company hasn't been listed long. And so we don't have much of a history here, but you can't see. That's right. Yeah, I forgot about that. Let's have a look at ComSec chart. There it is. So yeah, it's rapid rise and now the pullback. And this pullback looks like it might go even lower. Look at that volume coming in after the share price has been sold off. Massive volume coming in. I wouldn't be surprised if some people who had been invested in this company before the IPO are now selling out, taking their money and running for the hills. Anyway, so I'm a little bit dubious about this company moving forward. That's just me. Antiotech, I do remember seeing this ticker code, I think. Antiotech down 18.5%. Let's have a look. The announcements. They did a capital raising, so we can move on. It's a capital raising. Yeah, more than likely, the capital raising is at a pretty good discount to the share price, and that's why the share price is down. So we can move on. Anything else of note here? XPON, this is interesting. This is a company I did put on my watch list because we started to see some really good volume coming in. Yes, you can see the spikes in volume, but we haven't quite seen the share price rally just yet. But I always keep an eye on the volume. And really in June, there was a bit of a volume run, and then we're seeing these spikes in volume. So keep an eye on this company. But at this point in time, I don't have any interest. But as some say, volume precedes price action. So this is an interesting one. If you buy some shares in this company on the argument that we have seen a rise in volume, which may mean the share price will rally over the next few months. Don't know when that might be 6 months away. I don't know, but that's an interesting company. XPON. Market cap of this company is only 4.4 million, by the way. Okay, environmental group down 10.9%. Did I put them in my top 5? I did. They did release a trading update. Negative, but maybe not as negative as the market expected. But in saying that, I believe there was a few loose lips when it comes to this particular announcement. And when you look at the chart, you understand why I'm thinking that. So maybe already the downgrade has already been priced into the share price. Okay, let's have a look by market cap. The top losers today: Nuix, Zimplats, McMahon, Main Pharma, Atomic. Nothing of note here. Crypto Innovator ETF. OneView is doing a capital raising. Not surprised. AI Media, that has been on a really good run. Maybe a little bit of profit taking there. Nothing of note here. Which means we can go to the top 5 stocks of the day. And what I'll do after the top 5 stocks, I'll talk about the companies that did not quite make it, sort of like honorable mentions, and also have a look at their charts. So let's have a look at 5. Life 360. So down 7.44%. So they did release their third quarter results. A little bit of a negative tinge, and you can see that with the share price. And the reason I say negative tinge is there was a slight downgrade. I wonder if I can find it. There was a slight downgrade somewhere in here. I think it was a revenue downgrade. I almost can guarantee you I won't be able to find it now. So because I am trading this, I did have a quick look. Everything seems to be increasing nicely, not quite profitable. I think it was a revenue downgrade, or maybe I'm thinking of Nuix. Now, I'm pretty sure there was a downgrade here. Here we go. Here is earnings guidance. Yeah, so it was a revenue downgrade, so I wasn't mistaken. So revenue, now expecting revenue between 368 and 374 million. Previously, it was 370 to 378 million. So as soon as I read that, I went, oh no, the share price will fall today because that's a revenue downgrade. But they actually upgraded adjusted EBITDA a little bit by $1 to $3 million, from 36 to 41 to 39 to 42. And EBITDA loss has been also upgraded from a loss between 8 to 13 to now between 7 and 10. Positive operating cash flow for each quarter of 2024. So this is the main part of the announcement that would lead to the share price rising or dropping. So the market came away a little bit more negative than probably I was expecting, but maybe the market was focusing on the revenue downgrade and not really focusing on the EBITDA. Anyway, so let's have a look at the chart for Life 360. That's the only thing I took away. Everything else seems to be moving pretty good. I was impressed with the international growth. I like that. The international growth has been quite good, or is quite good right now. And it seems like that's expanding or accelerating maybe. But the market, not really liking it. Now, in saying that, even though I am trading this, it's not a sell signal. This is not a sell signal. I wouldn't be surprised to see the share price rally over the next few days. We sort of saw this back in August, 5th of August, share price. I wonder if they did release something on that day. Share price on that day fell 9%. Or that was a yen carry trade. But the share price then rallied after that. So it's going to be interesting to see how the share price moves or the market reacts in the next few days. If we see further selling, that could be a bad sign. But if we see share price starting to rise again, that could be a good sign. So this is not a sell signal for Life 360 just yet based off this chart. Okay, let's talk about company coming in number 3 or 4. We have EGL, Environmental Group, share price down 10.9%. Trading update, the most powerful type of announcement, although profit upgrade is the most powerful type of announcement. Profit downgrade, the most alongside, is very powerful as well, but for the opposite reason, share price more than likely will drop. And when a company releases a trading update, it could be positive or negative, so you do have to delve into it. If a company releases a profit upgrade, they should put that in the title, profit upgrade. Don't be cute, profit upgrade. If they're releasing a profit downgrade, maybe a trading update title would be better. Anyway, so let's have a look at Environmental Group Limited. And I'll be honest with you, not shocked this was negative. Not shocked this was negative because of what's been happening with the share price over the past few days. The market was whispering and people were listening. Maybe it's the other way around. Maybe, I don't know. I know. So it took a while for them to get to the point. Since this time, and talking about what their previous guidance was, revenue performance across the business has been strong and in line with expectations. So you're going, oh, okay, things are moving quite well. Then they say, however, the most ominous words ever when you're being positive. So as soon as they say, however, I went, oh. However, one project within the Biotech IES business unit has incurred material cost overruns, which will impact on EGL's EBITDA performance for financial year 25. The project is for engineering, design, and supply of 2 gas turbine silencer and exhaust gas systems in Singapore. The system requires several design variations, including to meet the road transport size requirements from port to destination. And they go on why it happened. As a result of this project cost overrun, EGL now expects financial year 25 normalized EBITDA to increase by between 10 and 15% over financial year 24. The reason there's no context there. So back up here, they said they expect normalized EBITDA to be to have risen 25%. So it is a downgrade. Well, EBITDA downgrade from 25% to now between 10 and 15%. 15%. So this overrun was quite significant. And a lot of times you will see these type of companies do this. So they put in their tenders for contracts, and a lot of times they're going to be a little bit generous with how much it's going to cost because they want to win the contract, and then bad things happen. The CEO says, Jason Dixon, we are incredibly disappointed that this issue will reduce EGL's growth in profitability for financial year 25. And then he goes and he's quite positive. A full process review has been undertaken to establish how this one-off oversight occurred and to avoid any future blemishes on our otherwise outstanding track record. Now let's have a look at the chart for Environmental Group. So the share price of this company was in a beautiful uptrend. And a few times during this uptrend, I went, why have I not taken a position? A beautiful uptrend, and then the share price started to turn a little bit negative. Now, the share price reached a high of 42 cents on the 1st of October. Now, there was a bit of a dip, but the dip kept going down and down. And the last few trading days, there was a pretty big sell-off, down 5% on Monday and down a further 8.6% on Tuesday. So what's happening there? And in fact, yesterday, or after trading yesterday, I did have a look at this chart and went, ooh, that's way more negative now. And then, of course, the negative trading update today, share price dropping to 28.5 cents, as low as 25.5 cents. And just based off this, looks like the downtrend has come to an end. But I don't know, this could rally from here. I wouldn't be surprised to see a bit of a rally from here, that all the bad news has been priced in. Those who wanted to sell have sold out. And maybe this is the bottom, or maybe 25.5 cents is the bottom. So negative day for Environmental Group, and share price has fallen a fair bit from its highs. In fact, it's fallen 33%. Yeah. Coming in number 3, we have Aristocrat Leisure. So a couple of positive ones here. So share price up 2.2%, which you might say that's not that positive, but it's on a pretty red day. So whenever you see a share price of a company rise by 2% on a pretty bad day, that's positive. Now, I'm a shareholder of Aristocrat. I've been a shareholder of Aristocrat for maybe 2 years now. I've always liked this company. I'm not a gambler. I don't use poker machines, but I like the company. So I am separating the company from what they do. It doesn't bother me because we're all adults. We can make our own choices. And I don't like nanny states. Would not like gambling to be banned. Just like I don't want anything banned. Well, some things probably banned would be useful for the world. But gambling, you could actually say gambling ban could be useful for the world. But a lot of people do like to gamble, and they can control their gambling. But it's those one-off people who have an addiction. That's the problem. So why ban it for everyone because of few people? So we should help those people control their addictions, not ban gambling. But for me, I have no interest in gambling. I don't find it fun. And again, the probability of you winning in the long term is not on your side. In fact, it's you have a very small chance of succeeding in the long term when it comes to gambling. Anyhow, but if you find it fun, go ahead. Now, whenever a company I own do release results, the first thing I look at is revenue growth. So I'm just going to have a look at the media release here. The first thing I look at is revenue growth. And a lot of times I just look at a table like this. So revenue was up 4.9%. I went, I would prefer revenue to be growing at a little bit greater rate than 4.9%. But margins did increase. So EBITDA margin went from 33.1% to 37.4%. So when you do see the margins increasing, that means their profit they do report will be greater than the revenue increase. So the profit increase will be greater than the revenue increase, which makes sense because if their margins are expanding, more of the revenue is going down to the bottom line. So in fact, their NPAT or their profit increased 16.6%, which is really nice. I like that sort of profit increase. So the only complaint I had is revenue. I would have preferred revenue to have grown at least 10%, at least 5%, but 4.9% is not what I want. Earnings per share up 19.7%. They must have done share buybacks or something like that. So yeah. Now, reported results, there is a difference between normalized and reported statutory and normalized. So actually reported net profit and NPAT are actually down. There must have been some one-offs there as well. So typically if there's one-offs, I ignore those. Anyway, so in my mind, this was an okay result. I did have one gripe, but otherwise okay. And this was a case of me sort of interested to see how the market reacted. And the market, yeah, liked it. I think the share price was down at one point, but the market overall did like it. So let's have a look at the chart for Aristocrat. And this is a sort of chart where you just can't complain. In fact, when I bought shares in Aristocrat, did I actually mark it down there? There it is. I bought shares at $35.97 2 years ago. Main reason I bought shares in Aristocrat back then, the company had been following for a while. I found the valuation compelling. So when I did first start investing, I was value investor orientated. I was looking for a really good value. And I'm still like that. I still am looking for value. And I found that with the Aristocrat back then. I think that P/E ratio was 15, which I found quite ridiculous, to be honest with you. In fact, I'm just going to confirm that. I just remember it was really low. And the way I'm going to confirm this is by FinChat. Aristocrat. Because you can see the historical P/E ratio of a company through time via Aristocrat. In fact, most of these sort of platforms, you can see that. So all you have to do is go to financials. In fact, does it have an overview here? Do we have a P/E ratio there? Let's have a look. No, we have total return, market cap, enterprise value. So if you go to financials, and I am a subscriber to this site, so I want 10 years of information. Actually, in fact, it's 10 periods of information, which is a little bit worse than Guru Focus, which is 10 years of information, no matter if you're looking at yearly, half-yearly, or semi-annual, or quarterly. This is only periods, so 10 years of 1 year, or 10-year annuallys, 10-year or 5 years of semi-annually, and I suppose 2.5 years of quarterly. Anyway, so if we go to ratios, they should have a P/E ratio here somewhere. Just take your time. I can be impatient sometimes. And there it is, P/E ratio history of Aristocrat. And all we need to look at is October 2022. It says here the P/E ratio was 22. For some reason, I keep thinking the P/E ratio was 15. Maybe that was right. Maybe it was more like 20. It says the P/E ratio now is 25. And it says the P/E ratio in May 2024 was 16. Now, for some reason, I just think the P/E ratio back then was 15 because I just remember thinking the valuation of this company was quite compelling for the growth. And it didn't take, actually, it was actually down. Share price actually fell in December 2022, fell all the way down to $30. So I held this at a loss for a while, and then it moved into a beautiful uptrend and just keeps on going up. So share price not quite doubled, but it's getting there. And I do wonder if this company is now overvalued, although the PE ratio is only 27.9. Now today looks like a negative reaction to the results. Initially, yes, there was an initial negative reaction. Share price actually did fall within the first 5 minutes of trading and then recovered almost immediately. And this is another reason why I like to just remain on the sidelines just to see how the market reacts. Because if I was paying more attention and I saw the share price dropping, I might have panicked and sold at the low. There would have been some people who did that. They saw the share price dropping and went, oh, I better sell before it's too late. And unfortunately, they sold at the bottom. Okay, so that's Aristocrat, things moving in the right direction for the company. And I thought it was okay results, not spectacular, but okay. Now, one I was a little bit surprised with was James Hardie, up 9.4% on the second quarter results. I did hear they had or released sluggish. I don't know where I read this. I have to Google it. I did read where was it? Was it Market Index? I can't spell market, sorry. In fact, I combined market and index into the one word. James Hardie. I think it could have been an email. News. Yeah, I think that was an email from Market Index I received, and they just mentioned that the company had released results, but there was sluggish guidance. And so I thought, oh, the guidance must have disappointed. Pretty sure this company released this company is dual listed, and they did release their results on the American market overnight. In fact, we can see James Hardie. Five listings. New York Stock Exchange. I just want to see the share price overview. We have to go to overview. Yeah, so in pre-market trading, James Hardie on the New York Stock Exchange is up 9.8%. So they must have released their results after the market had closed over there. But overall, the reaction from the market has been positive. I did have a look at the results, and initially I thought they were pretty good. Actually, well, that's only one page. Let's go back. Oh, it's 69 pages. So I did have a quick look at the results, and I thought, yeah, that's pretty good. And then I saw that email and, okay, so maybe the guidance would lead the share price or the market to be a little bit more negative than I was when I did see the results. So even though we had sales from ordinary activities flat, profit down, net profit down as well, there were some positive here. So if I can remember, I think it was the positive things I did read was how these results compared to expectations, and it was better than expected. And typically, if the share price is higher, either the results are better than expected or the outlook is quite positive. So I have a feeling the results were better than expected. So what I'm going to do is just Google James Hardie. So I don't think I was positive because of the results or reading the results. I think I must have read some article somewhere else. I can't quite remember. So there's quite a few reports on James Hardie. Oh, this could have been the email I received. For some reason, I got this email. Here we go. So James Hardie reports second quarter adjusted net income of 157 versus, this is actually the article I read. So I read this and I got some positive and negative vibes because their results actually beat guidance by 6.5%. But financial year 25 guidance disappoints with a net income of at least 635 versus prior guidance of between 630 and 700, which is actually not a miss. It's in that range, but it's towards the lower end. And North American EBIT margin of at least 29.3%. So I really like this little blurb in Market Index because it gave me two things I'm looking at. How the results compared to expectations, also guidance. And I had different vibes here with that. So obviously the market was more interested in the beat than the disappointing financial year 25 guidance because the share price has gone on a rally. I'm just going to see what the other places said. Yes, in fact, Reuters says second quarter profit down 12%, but beats consensus. So this is very important because I do know some newer investors get confused when they see results look bad, but the share price rallies 10%. It's not based off the results, the numbers. It's based off where the numbers compared to the expectations. And also, you've got to take into account any sort of guidance the company releases. So even though everything's down, it's the expectations are better. Let's see what Motley Fool says. See if they're smart too. And who wrote this? Let's have a look. James Mickleborough. And in fact, I don't give any reason. They just said that James Hardie, CFO, was cautiously optimistic. So there's actually no reasoning behind why the share price is up by a fair bit today. Anyway, so that's really all I've got for James Hardie, apart from the chart. So I have traded this company in the past, but I'm not trading this right now. Well, that's the 1 minute data. And you can see where I traded this back in 2023 into 2024 that took profits. And the share price hasn't really not done anything since then. I don't think the share price is in an uptrend or downtrend, even though the share price has rallied a fair bit today. I'm not calling this a breakout. So this is not the breakout I am looking for. But still a positive day for James Hardie and their shareholders. Now, coming in number one, we have Nuix. Okay, this is an interesting one. Share price down 22.82%. A lot of selling. And a lot of selling came in after the market opened. So yesterday, the share price opened or closed at 7.58. It opened this morning at 7.34, which was only down a little bit. Not down a lot, not down 22.82. So the selling has come in after the share price opened. And I'm wondering what's driving the selling. Is it just a sort of a positive feedback loop? Some people saw the share price down on open and went, oh, better sell. And that hit some stop losses. Share price kept on falling because of that. Not sure. Because when I did have a look at this was an AGM, by the way, Chairman and Group CEO address, I didn't find anything overly negative in it, apart from one thing. They did mention a few times, here, if I can see if I can find it. Okay, I'm going to open this little announcement or this twice because they've just stated here what their financial year, their strategic targets for financial year 25 are at the first page of this announcement, and I'm pretty sure they mention the same thing towards the end of the announcement if they're on target. Okay, so actually, they actually said towards the end of the announcement, they have reiterated financial year 25 strategic targets. So nothing has changed. Nothing has changed. They're still on target to hit their strategy targets. But there were a couple of things I did find interesting going through this fairly quickly. In fact, here it is. We continue to execute our strategy, and I take the opportunity today to reiterate these targets. Nuix sales are not linear over the course of the year, and our current expectations are that growth will be weighted towards the second half of the fiscal year. I am on I am on occasion a little bit dubious about sort of statements like that. That we expect the better performance in the second half. I am dubious about this, and maybe the market is too. But maybe not 22%. That seems a little bit extreme. Or maybe, just maybe, the market expected an upgrade. Share price has been on a really good run. Maybe the market expected an upgrade, but they didn't receive it. Anyway, so this was one I was really interested to see how the market reacted. And down 22.82% is a little bit of a surprise. I think this is a bit of an overreaction from the market, and I would not be surprised to see a bit of a bounce over the next few days. So even though I am trading this is not a sell day because we could see a pretty good bounce. Now, if we don't see the bounce, it could be a sell for me. So I need to see some sort of positive reaction from the market because otherwise the market is seeing something in these results, not the results, in this AGM that it doesn't like. So let's have a look at the chart. This, and again, this is not, it did not reach any of my sell signals. In fact, there has been a little bit of bounce during the day, but not a great bounce. So beautiful uptrend, negative day today. Share price if you have a look at the 1 minute chart, yeah, there's a big sell-off in the first, say, 30 minutes. That's when the share price did reach its low, after 35 minutes of trading. And there's a nice little bounce, and I think the floor might have been reached. Massive volume coming in at the bottom as well. That's a good sign. The bottom might be reached when you see massive volume coming in, capitulation of those who want to sell. And on days like this, I just like to wait, just hold back just to see, because I've been burnt in the past by selling on days like this, and the share price of the company just bounces. The market sometimes overreacts, and maybe this is one of those occasions. So let's go back to the chart, daily chart. Yeah, so my stop loss, my manual stop loss is $4.93. The 100-day moving average is about $5.40. And if I put my stop loss 20%, it has fallen through that. But the main reason behind that is because the company has risen up so quickly that a 20% drop from the high is not that much. It wouldn't take much effort. So today it has fallen through that. So I'd love to see the share price tonight to get back above that level. Okay, so that's the top 5 stocks of the day. Now I'm just going to show you some charts of companies that did not quite make it into my top 5. Let's start off with CBA. Share price down a little bit today, but nothing too extreme. In fact, the share price has risen from the lows of today, down only 0.75%. And yeah, this one, if I was trading this, I would be continuing to trade it. No reason to sell just yet. Now, I still believe that eventually the share price of this company will move into a downtrend because it is significantly overvalued. Historically, Commonwealth Bank right now is historically overvalued. It has never been this overvalued, and it's not growing. In fact, if you look at the results from the previous corresponding period, no growth at all. Now, some people might point out it grew from the last quarter, but you need to compare to the previous corresponding period. So no growth from the previous corresponding period. Company is going sideways, no growth. And this sort of valuation, P ratio of 27.6, is for a growth company. Historically overvalued. Incredible. So it's CBA. Lycopodium, mentioned this company yesterday. They gave guidance for financial year 25, including dividends, so between 0 and 15 cents. They actually had to clarify that statement, and I think the clarification was it's only the first half. It's not for the full year. So maybe, I think they got a lot of questions, a lot of phone calls about that from shareholders. But anyway, chart still looks negative. Not much of a bounce today, up 0.5%. Light and Wonder. This is definitely one that, so close to getting in the top 5 stocks all day. Share price down 4.9%, was down by 10% at one point today. Company did release their quarterly results. On the surface, in some respects look good, some other respects look negative. So I don't think the market is quite sure about the short-termness of this company. There's nothing much else to say. I am trading this at the time, but the share price needs to get above 168 for me to become happy with this trade. It's not quite there yet. It's 151. We've already talked about Bell Financial. Don't really need to talk about that. Aristocrat, James Hardie, Nuix, Energy Environmental Group, Life360. Camplify did release a negative announcement. What I thought was a negative announcement today. Share price is, something down 1%. The reason I say it was a negative announcement is because, let's have a look at the wording. According to this, share price is up. There you go. So they had the AGM, and Camplify Holdings Limited AGM trading update. For those who aren't aware, a lot of companies will release a trading update when they have the AGM. And that's why I love AGMs, because a lot of times it's the first trading update a company releases for the financial year. And they did release a trading update, and it was a negative. Where is it? It was a negative somewhere. It was negative. I'm pretty sure it was negative. Well, it sounded negative, but maybe I'm wrong. Completely wrong. Anyway, let's have a look at the chart for Camplify. This was another one I was a little bit interested in the market reaction. Share price has been a downtrend. I'm going to get rid of my trading stop here because it looks a little bit messy. Share price in a downtrend. This has been mentioned a few times on Ausbiz Recall, particularly from one fellow who loves this company for some reason. Share price in a downtrend. I don't think there's any reason to get excited about this company just yet. There is no way you can classify this company as high quality. And that's the only reason I might look at this sort of chart and think about buying into a company if I think it's high quality, and I do think there's some value or some good value when it comes to the company. But Camplify, I wouldn't be there just yet with this company, and who knows, share price could continue in a downtrend for a few years. Just don't know. And finally, Insignia did release something today. I forget. It must have been in the AGM as well. And they also released a trade. Was it a trading update? I think it was. Yeah, guidance update. I thought this was going to be positive. Also a strategy update. I thought this was going to be positive because of the chart. You can see the share price of Insignia had been a really nice uptrend. So I thought this was going to be positive, slightly negative. That's why the share price is down a little bit. But we have seen the share price rally during the day. And finally, Shopify. So I do own this in my super. This is a long-term hold. I bought this company many, many years ago. Let's have a look where I bought. Bought this in, well, 2 years ago. Seems way more than that. And this was another case of value. I saw value in this company. Not quite near the lows, so you don't have to be perfect timing the lows. So there was no uptrend in the share price. I just looked at it and went, I think there's good value at $37.63. Share price is now $108.92. And this is a beautiful breakout. In fact, there was possible loose lips just before. You can see the share price on a really big rally leading up to these results, and share price up 21%. And I had a look at the numbers, loved it, loved this, the growth in this company. And this is one of those companies, even though it has a market cap of $140 billion, this is one of those companies I think can grow over the next few decades. And so wouldn't be surprised to see this company significantly bigger than it is now. So Shopify. Anyway, so that's all I've got in regards to the honorable mentions, companies that did not quite make it in my top 5, including Shopify. If there was not enough good ASX announcements, I would have included Shopify in my discussion today. Now, a few of your comments, so just touch upon one or two. Delorean cracked 20 cents. Now, I'm going to have a quick look at Delorean because last time I looked, it was 21 cents. It's 20.5 cents. That's okay. Changed orders for yesterday. That's fine. So this is a great. I don't know if I should take profits yet. The share price has really run up really quickly the last few days, last 5 or 6 days, and is well above the moving average shuttle. And I do expect the share price to pull back. If it doesn't, there's another scenario. Share price just goes sideways to let the moving averages catch up, and then it takes off again. I would love that scenario. That tells me there's a lot of strength in the sentiment to this company, a lot of strength in this company if that happened. Even if there's a pullback like we have seen in the past, maybe the share price drops to about 17 or 16 cents. That wouldn't be too bad, but I do prefer a consolidation from this area. The other thing I probably like is a little bit better volume. Now, in saying that, and 4 really good days in a row, and when I say good, I mean comparing to what we've seen prior or after that really big volume day on 23rd of July, which was the breakout for this company. So as soon as the company released whatever they did on that day, I forget, it was a trading update, if I remember correctly, I've been following this company. Share price went above 10 cents. There was a pullback, went above 10 cents again, and then I bought on the second pullback. I wish I bought on the first one because this would be almost a 4-bagger. Anyway, so chart looks pretty good for Delorean, and the only question I have, should I take profits? Don't know. Don't know just yet. I haven't really thought about it. Anyway, so that's Delorean. It has cracked 20 cents. That's good work. Well, and hopefully you're a shareholder. Sensei, it is. Thank you. Rick Fillion, NIB profit downgrade down to 558 before recovering in the afternoon 598. I noticed via market index there was a couple of broker downgrades for NIB holdings, and that's probably why the share price is down 3.86% today. Also, maybe a bit of an overhang from yesterday, although the share price didn't fall all that much. It was only down slightly. And if we do have a look at the chart for NIB, NHF, there was a little bit of buying yesterday. So I think some of that buying, the reason I know there's buying is a green solid candlestick, which means share price opened near the low and closed near the high. So I'm not sure why there was buying yesterday, and then a couple of brokers put in downgrades today. And to be honest with you, the chart looks pretty ugly. So thank you, Rick Thelian. And in fact, let's have a look, because you mentioned there was a bit of a rally yesterday. Let's have a look at the 1 minute chart. Actually, let's have a look at the 5 minute chart. Oh, look at that. 2 days in a row. Look at that. There was a massive rally yesterday, opened really low and then a rally. Even today, when the share price opened, it was down almost 5% and then a little bit of rally, but the rally not quite as strong as yesterday. So really interesting 5 minute chart. It just seems like someone just wants to buy at about 560, 565. Interesting. Thank you, Rick Dellian, for pointing that out. MSA, Master Services Agreement. Thank you, Forrest Hill. And that's it. I've answered all your questions. Not many questions. So if you do have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.